If there was one strategy that I had to use if I started Forex all over again, that would be a simple liquidity sweep and in line with your bias and also your confluences. Let's get right into it. Um, this works on all was it all pairs? Well, all the pairs I've done it on. Just remove all this. It's actually too easy. You, 90% win rate. 90%. Anyone ever tell you 90% win rate on this strategy? Yeah, mad things. Anyways, obviously, this strategy works around session opens and yeah, so if you don't know, if you're on Forex Factor, if you're on Forex, yeah, you trade Forex and you don't know what session opens are, obviously I'm on the London time, but you hop over to Baby Pips, go into their tools, Forex market hours, boom, put in your time zone, there you have it. Drag it here, look at that. London opens 8 a.m. New York opens 1 p.m. And we don't care about Sydney because let's be honest, we even trade Sydney time anyways. So and Tokyo opens what the hell? 1 a.m. So Asian session, London session, New York session. That's all we need to know for Forex. Obviously, it's a little bit different for uh, indexes and uh, futures and stuff. But I'm pretty sure commodities like gold are the same about market opens and stuff. So let me see. All right, boom. What are we gonna do? What are we gonna do first thing? First things first. Mark out our open. Our session opens. Uh, there you go. There's London. I mean New York. Then that's London. Where's 1 a.m.? There you go. Obviously, there you go. What's that? Asia session. Asia session. London, New York. And if you guys do not know already, if you guys, oh my days, if you guys don't know about Forex Factory, yeah, hop on it right now. This is where you find all the news, FOMC, all these news stuff, yeah. So before anything, any trading happens, I suggest you go over and check this out. Obviously, here's my filters. You don't really need the yellow ones. Those are just like, those don't really, those are low impact. You really need to know about the medium and the high impact. High impact, you really need to know about that one. And this is just if there's any bank holidays or some the gray ones. Over here, just click which one, filter the pairs you're working with. Me, Great British Pound, Japanese Yen, USD, but the Euro, why not? Wait, what the? Alright, so now that we know what time our session's open, we need to find our bias. So, honestly, I don't really need to look at the monthly, weekly, or daily, but it could work. Like if you guys want that real good bias, but honestly, I just go for the 4 hour, 1 hour bias. So if we disregard this whole London session open, I mean, New York session, like let's say we didn't know that was there, are we seeing, let me go into this 4 hour. We seen this, so right here, say it's pretty up, innit? Ah, fat, fat movement up. Obviously, there's like a breaker structure here onto this 4 hour, but this is where the daily comes in, and you could tell that it's up candle anyways. It's like an uptrend anyway, so that heightens. That's the only way I'd use our daily ones, but obviously for 1 hour is just mainly. So we know it's pretty up going into New York session. So what do? We look into 1 hour, moving 4 hour, pretty up in it. Just before um flipping New York session open, we see that this is also uptrend. What do we want to see? What are we looking for now? Now that we have our bias, get our little ray diag, get our little ray thing, and let's try to find some places of liquidity to be swept. So when we're looking for this, yeah, we either most of the times we're looking for 30 minutes, but sometimes we can look for 1 hours. So look at this. As session opens, wow, what happens here? Liquidity sweep right here, right here. Liquidity sweep right here. Obviously, if liquidity doesn't get swept here, it could also happen pre-market, just as it did right there. So pre-market sweep, we could just carry on. We don't need to look for open market sweep, but also obviously as we see that after like an hour or two, we do see a liquidity sweep. If we didn't have this pre-market, we would have seen and used this as a liquidity sweep. So what do we do now? Scale down 5 minute. So once we're in the 5 minute, what do we want to see happen? HMMT trades. What are we looking for now? We're looking for a little break of structure. So off of this liquidity sweep right here, this down move, we're trying to look at the highs of these two, just the recent highs. So this one, boom. And as we know, break of structures, close, kind of closure above it, boom. Look at this, lads. Sexy break of structure. Now after that, what do we want to see happen? Honestly, we could have taken our trade instantly on this one because we invalidate this uh, for value gap, inversing it and breaking structure. I think that would have been like a once in a lifetime. Not once in a lifetime, but that's like rarely. And then you just take your trade like this, stops below here, or even stops below the low of this move up. That would have been good. Put your take profit. I'll talk about take profits after this, but if we didn't know about that, we just purely went off of textbook HMT trades strategy. Break a structure. Why are we looking for it to happen? We're looking for these confluences. Let me get a textbook right here. I'm gonna rank them as well. So fair value gap. Wait, give me that. Give me a second. Alright, boom. These four confluences is all we need. First, first of all, I mean in first place actually. Sorry, for value gaps mostly get tapped into from my experience and then continue upwards, just like this one right here. For value gap right here gets tapped into, continue. Anyway, so that's what I would rank first. Then second would be this or just order blocks, which also this one gets tapped into as well. This whole move down, order block, instant tap into, breaker. I wouldn't really put breaker. I wouldn't really. Most not many times I use breaker, but let me just switch this then. Yeah, I put equilibrium at 3. Then we get a little breaker. Equilibrium breaker block. Alright, so we can even see from this low to this high. Equilibrium gets it tapped into. What do we do now? Alright, bet. we see it get tapped into, we can either one, wait and look at the reaction it has off of it, or two, scale down 1 minute and find another like a 1 minute uh, confluence to go in line with it and look at the reaction. We could have placed our trade purely off of this huge reaction going out of this equilibrium fair value gap and also this breaker block. I mean, order block stops. You can either put it down here on this reacting to this fair value gap, or if you want really safe, put it below this order block at this low and target your whatever liquidity. I'll just get into that later. But if you didn't want to wait for reactions off of these 5 minute, we could hop into 1 minute and look for sniper entries. Sniper entry right here, lads. Look at this. This 1 minute fair value gap. Boom. Bag work, light work. Look at this reaction and play off of it. If this candle, look at it, it fills it up completely. The next candle wicks down but doesn't close below it, so we're still good. But it closed above it, so we love that reaction. We enter off the next candle. So basically, just the candle close, enter off this candle close, push it all below here, if like this previous candle low, or if you want to go real nice and spicy and real safe with it, put out this 5 minute fair value gap. But honestly, what I like to do is, yeah, put out I like to play it safe. Not really. That's a bit low. A bit too close for my liking. So yeah, I like to play it safe most of the time. Put it on the 5 minute confluences. And yeah, once you get your entry, yeah, you're probably like, oh, HMNT trades. How do I look for my take profits? Look for the nearest buy side liquidity. So, because we have our bias on the 4 hour, 1 hour, 30 minutes, ideally you want to look at liquidity places on the 30 minute or the 1 hour, since we've seen our liquidity sweeps there. Anywhere where the liquidity is swept, look for the place for take profit on that. So when we see, as we can see, we marked out, we had a 30 minute liquidity sweep right here on this candle. Let's just move this back one. That 30 minute sweep. So what are we gonna do? Mark our little 30 minute liquidity. Take profits. So my first one, honestly, the way how people always have their take profits here, like on top of the very top to it, um, wick. In my opinion and my experience, I see price most of the times drop into the body close and opens over here. Like we push through, like let me say for example, like price usually goes up here, wicks through it, then falls back down. That's why I see a lot of times, and I don't really see it push above here all the time. It usually, in most cases, wick here and then have trouble going back up there again. It'll just take too long in short terms. So what I like to do is just place them down here, like on the open and close. So first one would be here, first take profit, obviously, right here. At these highs, just place them at any highs, or say you have a fair value gap here. You can even place it at the middle, mid-range, or even the start of the fair value gap. What another place is, you just keep going higher. You just find all these equal highs. Boom. Real nice liquidity. Take this one out and use all this. This would have got smacked. And if these aren't looking great, let's say price was already here and this was the next draw on liquidity. You didn't want that and this wasn't here. Just scale out. Boom. Wow. This is a nice spot of liquidity to get grabbed. Scale out even further. It's not much to scale back even further, but I'm sure there's something back there to be used as a spot of liquidity. So once you got that drawn, obviously because we took our trade here. Let me take that out. What's the look at this. First take profit. 1 to 6. Flip. You probably don't even need all this. You want the last one to get hit. This is what would have happened if the last one got hit. 1 to 21. That's a bit outrageous. Let's say you did have multiple take profits like here. 1 to 10. If price gets around this area, close off around 80, 50, close off 50% of that or 80, and then final take profit there. Or if you're a bad man, you just let the whole thing play out. You want the whole 10. Then do that up to you, but 1 to 6, 6.2 is the first take profit. Yeah, I would have just took that. Honest, this is a trade that I won. This is the same exact trade I won. And I even put my take profit. My take profit was up here somewhere with these equal highs up here. Really nice take profit up here. All these equal highs getting grabbed by me. Every single one of these are my liquidity. So this is a massive win for me. Took a bit long though. If you're not the type of guy to sit there and wait for everything to go, I like if you don't have that time to check out the charts a lot, because this trade did play out for, let's say, 1 to here. Is that 2 hours? Can't wait 2 hours. Yeah, put out the first take profit, take everything off. I would took a shy 30 minutes to unfold. Like, you make your day, you make your bread, you dip. Simple as that. Now, that's this. Honestly, like, there's no other textbook strategy out there than this. It's so textbook. If you're a robot, you could literally just automate it going like this day in, day night, and you would be winning every time. Close to 90% win rate. Obviously, I will show you more on this one, but for now, I'll just try to show you what it would look like on gold, for example. If we use the same strategy. Actually, let's just go on day futures. Boom. All right. Let's go on 5 minute. Let's mark out our opens. In indices, it's a bit different from so for London time, mark New York session opens at half two. Pretty standard. Yeah. And I don't really trade the other sessions. We only trade because this is like indices, Nasdaq and S&P, where most of the movement happens on New York session. Ideally, you just want to trade the New York Stock Exchange open. So textbook. What do we want to look for? Bias for our shorts. Instantly. Downtrend. there's no way you guys will say uptrend after looking at this. 1 hour, downtrend. Boom. We know where we're going. What we do, go to the 30 minutes. And what do we wait for? A nice little sweep. Market opens, sweeps here, even goes up to these 30-minute, these liquidity up here, sweeps it here, boom, sweeps this. What do we look for? Scale down, break a structure. What do we see here? Lows here. Wow, break a structure right here. Actually, we could just say this, break structure right here. And just like previous on this one where you could just take the liquidity sweep and the disrespect of this fair value gap. Same thing would have happened here. we get a disrespect to this fairy gap while breaking structure and also liquidity sweeping. So obviously, when you take your trade, you take your trade here. We even disrespect this one down here. All the while grabbing liquidity and breaking structure all in one go. Put your stops up here or even the recent high, this. And obviously we wanna look for 30-minute draws on liquidity. Liquidity. Boom. See what I mean? This is a perfect example. Most people would put their draws on liquidity here. What does price do? It didn't even touch it. Didn't even touch it. Sweeps this open and close, these candles, but it just doesn't touch this. Just doesn't go anywhere near it, and it trails back up. Simple as like I'd say, yeah, this one got swept, but like just barely. So just a good rule of thumb, uh, just put your liquidities, take profits on these spots. Obviously, if you were a bad man and you wanted the second take profit, you could have put it here. No problem, no bother. But if you took it like what I did, like what I do, and put it here, you would have made a 1 to 2, a beautiful 1 to 2. Not too shabby, isn't it? Not too shabby now. Let's go scroll down. Like it's just that easy. Like this whole movement, boom. Let's say let's let's try and move on to a different day. And let's see what time is. 20 minutes, not bad. Uh yeah, so like let me go on gold for a bit. Pretty sure they have the same market opens and the close. 8 o'clock, third. Whoa, 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 whoa. What's happening here? 13, 8, 1. Playing any one of these sessions. Ace session, depending on which pairs you got, it just depends. Because this gold to US dollar, you ideally want to take trades on the New York Stock Exchange. If it was like the Great British Pound, take it on London session. Because most of the times that's where most of the movement happens. And if it's like the yen as well, take it on the Asia session. But for me, I'd say if you're on the British pound, just stick to London or even New York. New York, for some reason, moves a lot, even though this isn't even a New York pair, USD pair. But anyways, enough of that. All right, let's move on to gold. Let's see. So let's check. We're in New York, yeah. Obviously, you can tell this is uptrend, but if you go on the down, yep, this is up. Boom, boom. Trying to look for ups. This probably wouldn't have seen any trades for any ups. All of these, yeah, you wouldn't be able to take a trade. I don't know what happened here, but that's probably a news day for the house. Sure. Was that Friday? Yeah, news, PMI, home sales. Yeah, that was a holy news day. Yeah, so don't take trades on news days. That's all I have to say. You wouldn't be able to take a trade on this day, so that didn't matter anyways. Let's go to the day before. Wednesday will do. Wait, Thursday. Alright, uptrend. Uptrend before New York Stock Exchange open up here. Uptrend. We don't even get a break. Oh, we actually do, but like it's still uptrend. Here, 30-minute, boom. Instantly, market opens. Sweep, 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 and into this. We get sweeps here. Boom, boom. I said we didn't look for these sweeps. We would have got all these sweep, all these liquidity right here swept. Even this one. What do we do? Simple. Textbook, textbook. Hop in a 5 minute. Oh, what the flip. Look for break structure. So, monitoring this. Nope. This. Well, later on. But here, nope. Here. Wow. Wow, wow, wow. What the flip. Anyways. Wow, wow, wow. Break a structure on this candle. Order block right here. Boom, boom. Equilibrium right here. Bag work. Bag work. What's that? We don't even need the equilibrium. This thing alone is good enough. Boom. Hop it in 1 minute. What the hell? Anyways. Order block right here. 1 minute order block right here. Taps into. Look at the reaction. This is a good reaction. Stops below the 1 minute confluence, or if you safer, what I would do, 5 minute confluence, and draws on liquidity. Alright, bet. Where's the draws on liquidity? Right here. First one, right next to us. Right here. All these equal highs and equal lows, whatever you want to call them. Put it at the open and close of these candles. Bag work, smack work, boom. Basically 1 to 2. If you want to go, see, this is where we have to scale out and use other, that doesn't work. This fair value gap here. Open and close of this. Close, middle, open. That would have been a good one. The range of this one. Equilibrium. All of this. The open here, the close here. All these spots of liquidity. Wow. Most of them would have got hit. This equilibrium. Obviously, you wouldn't think. I mean, it's gold, so you can't think. But most of your profits would have been smacked right here for a whopping 1 to 7 RR. And if you were targeting this one 1 to 12, that's a lot, you know. But we take 1 to 7. How much did that take? How long did that take? Not that long. Smack work, bag work, get your bread, you move. It's just that simple. Like there's nothing else you can just just works like that. This is this is just works plain and simple textbook. Follow each step and you will literally you have to you be like brainless if you can't even follow steps. This is basically step by step guide on how to win every trade. Obviously some trades you wouldn't be able to find. Just like the recent one on gold. Like you would not be able to take a trade on this day because of how much news there was. But like for most case, boom, what is that? Gold we won? Uh, this one? Where's what the? We won this one? Was that two? 2 out of 2 right now on Nasdaq as well? Where is it? 3 out of 3? Is that 100%? It is. Obviously, if I wanted to. Actually, yeah, sure, why not? Let's do one more. Let's do one more. Feeling devious, I wouldn't do it, but if you wanted to, you could take a trade on every single session open the day has to offer, and you would win every time. Let's say right here. What is this? London session open? 4 hour. It's just as simple, lads. It's just as simple. Let's take away, move the drawings, uptrend. Obviously, you wouldn't, you shouldn't be trading if you think this is a downtrend. Uptrend, 1 hour, session open, boom. What are we looking at? What are we looking for? I should mark this as well. What are we looking for? Market opens, 30-minute, boom, 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 sweep, sweep, sweep. Oh, oh, what is this? Wait, let me get my magnet. What is this? What are these? Sweep, sweep. Let's say you didn't know this was happening. We didn't know. We didn't know where to find sweeps. We don't go for sweeps behind it. Let's just theoretically, we're only looking at trying to find session sweeps, like opening session sweeps. We're just tunnel vision on looking at sweeps here. Boom, this sweep would happen. Right here, this sweep would happen. And if you didn't account for these ones to be happen, like, yeah, whatever, and you only seen this sweep happen, boom, 5 minute, go inside. Wait, where are we? Anyways, whatever. This sweep happened. Get a little breaker structure here. Fair value gap entry right here. This tiny fair value gap, or even this breaker block right here. I mean, order block. Equilibrium. Probably wouldn't even get smacked. Let me see. Nah, that's taking long to get smacked. But anyways, we got one of these tapped into. What do we do? 1 minute for the sniper entry, or just look at the reaction off the 5 minute, enter off. Boom. Wow. 1 minute fair value gap paired up with a 5 minute fair value gap. I like the sound of that. Tapped into this. Tapped into this fair value gap. Boom. Fills that up nicely. Good reaction off of that, lads. Boom. Stops either down on this 5 minute confluence or even below this recent low that filled up this fair value gap nicely. And 30 minute, looking for your draws on liquidity. You know the stuff at this point. It's been 30 minutes. You know the stuff. Fair value gap right here. Open and close. Open. Middle. Close to this. Take profit up here as well. All these equal highs and lows. Somewhere here you would have had that take profit. And just in the span of flipping what's that? When did that happen? 2 10 minutes. 10 minutes. 1 to 6. Well, basically 1 to 6.5. 10 minutes. 10 minutes you would have got. And I say you just left a runner here for break even after taking like 80% of your profits here. 10 minutes. And you got stopped out with like 10 minutes for this. 10 minutes. Yeah. Lovely bag work. Tell me that ain't lovely. The trade I took was reacting off of one of these bigger time frame order blocks. And I took my trade somewhere here, I think. It was this one with stops below there or something like that. And I took it all the way up somewhere out here. Yeah, there we took mine. My one was like this. To 1.6 because of this. Right, yeah, but we won't get into that. That order block right there. Always, this is like what you do for like other market experience. Somewhere here, I took a trade. And like, yeah, somewhere here, just scale down. I think it was like this. Just something like that. Yeah, then take profit up here, 1 to 3. That would have got hit, but that would have got really long. If I, that would have got past this, but like, honestly, textbook, step by step, 1 to 6, I take that any day. 1 to 2, I take that any day. But 1 to 6, yeah, give me, like Poppy, give me. I think that closes here. 1 to 9, even better. Not one time out of the 10 minutes did it trickle down to this. Yeah, guys, it's just that easy. Like, just follow the rules step by step. Find your bias. Look at the daily if you want. Mainly look at the 4 hour, 1 hour bias. Liquidity sweep on the 30 minute. Break a structure. 1 year confluence. Look at a nice reaction. If your confluence is on the 5 minute. Let me take this out actually. If you're purely looking on confluences off the 5 minute, get a 5 minute fair value gap. You like that reaction? Boom. Actually, it's up here. Boom. Enter. Don't even need to go on the one. But if you want that real nice sniper trade, go hop in the 1 minute, like 1 minute fair value gap paired up with that. Boom. Enter off that because you like that nice reaction. Look at that reaction. Actually, yeah, it is up here. Yeah, it is up here. Because we enter off of this reaction. Stops below here if we're a little cheeky. Want to play safe, stops below there. But overall, that's it. Like, there's nothing more said to be done. This is just the best strategy you can ever. Obviously, as time went by, I used to look at only liquidity sweeps on the 1 hour, but I had to adapt it. So, because most of the times liquidity sweeps happen in the 30 minute anyways. This is just bag work after bag work. Hopefully you guys like this video of my strategy that I will forever be using. Like, no need to change it. If it works, it works. Like, this is the strategy I use for all my pairs, be it Forex, commodities, or futures. Like, 4 out of 4 we just won. Like, it's that simple. Use it to your best advantage. Do what you want to do with that strategy. And yeah, have a good one, lads. And sorry for not uploading that much. I just been really busy with some test and exam stuff. Yeah, that's me out. Yeah. All right, lads. Have a good one with the strategy.